Hello everyone, welcome back to my YouTube channel and I hope all of you are doing great. So in today's video, we'll be taking a look at how to identify the leading sectors. So the simplest way to make money is to stick with the stocks that are leaders, means that are outperforming the market, the broader market. And for that, if those leading stocks are combined with the leading sectors, because most of the time those leading stocks will belong to the leading sectors. So our job is to find the leading sector first, and within that leading sector, then our job is to find the stocks that are leading the market or which are outperforming the market. So before that, just let's just take a look at this Nifty 50 index, how the broader market is performing. So as you know, the market has been rising since June 20 something, and it has been consistently rising as compared to the broader market, which is uh, sorry, I meant to say as compared to the foreign markets, especially the American markets and other markets as well, that are continuously falling. And during the downfall in American market, we just consolidated here, and now first we have broken this trend line. As you can see here, this downward sloping trend line, first this was broken, and now currently we are facing resistance at 17,992, which will most likely be taken out really soon. The Indian market is very well outperforming the all other markets, especially the American market and the European market and the Japanese and other markets as well. So currently our job is to find what are the leading sectors, and for that, first you need to know the names of the sector, and for that you can just do a simple thing. Just go to Google and search for Nifty indices. Okay, just go to Nifty indices and just go to this site. This you'll find the site at the top around Nifty indices. Okay, uh, first we'll be taking a look at the sectoral indices. Okay, so next go to the indices, and here the sectoral indices. So there are multiple sectors, and there are uh, indices containing the few 5, 10, 15 stocks belonging to that sector, like the Nifty Auto, where we have the stocks like the Maruti, Aisha Motors, TVS, Hero Motocorp, Bajaj and all. And then we have the Nifty Bank, Financial Services. Then we have Nifty FMCG, Healthcare. Oh, wait a second. Sectoral indices. We'll go to sectoral indices, and then we have auto, bank, financial services. Financial services includes like your insurers and your brokers as well, and the FMCG, healthcare, IT, media, metal, pharma, private bank, PSU banks, realty, consumer durables, oil and gas, mid small financial, healthcare, and IT and telecom. So next, what we'll do is we'll go to the trading view and we'll take a look at how these sectors have performed from last 6 months. Okay, so we'll be using 6 month time frame. We'll be looking at how they have performed from last 6 months, and we'll be using the line chart just for the clarity, just for the clarity. So first, we'll keep the Nifty 50 as our benchmark index. Then we will compare it with the Nifty Bank index. First, we'll add the Nifty Bank. Then we have the Nifty IT index. Then we have Pharma index, Nifty Pharma. Okay, wait a second. Yeah. Then we have the Nifty Realty. Then we have Nifty Metal Index. Uh, I haven't added auto yet. Okay, so we have the auto index. Then we have metal index. Then we have the auto, bank Nifty, Nifty Realty, the Nifty Metal, Nifty Pharma, Nifty IT, and here, if you forget like me, here we have the media, then the PSU Bank Index. We have Nifty Media, Nifty PSU Bank Index, I'm not taking the private banks. Then I will take the Nifty Healthcare Index, Nifty Healthcare Index, and lastly we'll take a Nifty Oil and Gas, Nifty Oil and Nifty Energy. Nifty Energy would be a better one. Okay, so these are the different sectors and these are the returns that they have given in last 6 months. So as you can clearly see, Nifty Auto is the clear leader. As you can clearly see, Nifty Auto is the clear leader with 37.94% returns, followed by the PSU banks and the banking index. Oh, I forgot about the FMCG. Nifty FMCG. Okay, so yeah, on second number we have the Nifty FMCG, then we have the PSU bank, and then we have the bank Nifty, then we have Nifty Realty, Nifty Energy, then we have Nifty at 10%, and then we have media, and then we have the metal, healthcare, pharma, and the laggard is the Nifty IT. So from here you can clearly see the stocks belonging to the auto sector, FMCG sector, and PSU bank sector, and the overall banking sector have been doing really well. So this was our benchmark, that is the Nifty 50 index, and it has given only 10%, 10.52% returns. And as compared to it, the auto has given 37% and FMCG at 27%. So one thing is clear, you should be looking at stocks belonging to these sectors: the auto, FMCG, PSU banks, Nifty Realty. And second thing, what you can do is these sectors are a bit extended right now because they have consistently been outperforming the market from last 6 months, and there always happens a sectoral rotation where the sector will start performing not that good and any other sector will start emerging. So as you can clearly see, the auto has been the leader and continuously right now also it is performing very well, and I believe it will keep performing very well for coming months as well, and the FMCG also. But if you look at the emerging one right now, so PSU, especially the PSU banks and the overall your bank Nifty has some really good opportunities right now. Uh, so it can even outperform the Nifty FMCG and Nifty Auto in coming months. That is my belief, and as well as the Nifty Realty. So these two sectors I think can outperform the auto and FMCG and will lead the stock market in the coming months. And as for the pharma is currently very stable. It has underperformed the market, broader market. The Nifty has given around 10.52% returns versus the pharma is at minus 2.96%. So I think there is also some opportunity in pharma, but right now, if you see right now, it's not in a very good position. Maybe once it starts performing, then it can, you know, uh, beat the benchmark as well. And as for the Nifty, I have a contrarian view. So Nifty is currently the, from last 6 months, it is the worst performing index. So there is some bit of value. Maybe I'm a bit too early and this is a totally contrarian view. But I think the Nifty can give some returns and maybe even outperform the market for few coming weeks. Although there are many other factors, but that is just my assumption. And if we take a look at the year to date returns, then we have the PSU banks at best. So PSU banks from year to date, that is from the January 1st. So PSU banks and the energy, these two have been the best performing sectors. IT again is the laggard sector, but as you can see here, if you look at the chart carefully here, so it is kind of forming a bottom, right? So Nifty index, in my view, it is kind of forming a bottom right now. So there is a good opportunity, and the pharma and the healthcare index has also underperformed. So I think so there is some bit of opportunity here as well. So but as you can see, the best my topic would be just the banking sector and the auto sector. Auto, although a bit extended, but still has some good opportunities, some good names. And the next thing what we can do is just go to the stocks belonging to particular sector. So let's suppose I have a contrarian view on IT. So I'll take a look at the IT sector stocks the stocks belonging to IT sector and find the leaders. So here I have some taken some few names belonging to the IT sector, and this is the chart of the last 6 month returns of these stocks belonging to IT sector. So as you can see, they all have given negative returns. LTI being at the the most falling stock around minus 27.61%. And currently, if you see, Scient is currently outperforming its other peers. So I'm just talking about the sector stocks belonging to the IT sector. So as you can see, the Scient is currently outperforming all other stocks belonging to IT sector. It has fallen less as compared to the TCS, Infi, the Mindtree, HCL, LTTS, and LTI. And let's take few other name. Let's take a look at few other names as well. Let me remove all these first. Then we'll be taking a look at few of the IT sector stocks and which one I think is a good bet right now. So one thing, if you see clearly, first let's take the IT index as the benchmark index right now. So as you can see, from last 6 months, it has not given any good returns. It has fallen around 17.95%. So if you look at the stocks belonging to IT sector, I'll just type the names as they come in my hand. So one is TCS, then we have the Infosys. First, I'll be taking a look at the big four. Then we have the HCL, and then we have Wipro and Tech Mahindra. So these are the big five names. So as you can see, if you compare the big five, if you compare them to the Nifty IT index, so clearly the TCS is the outperformer. It has fallen uh, just 10.44% as compared to the other stocks. Wipro has fallen the most. Now let's take a look at some of the mid cap names as well. If we take a look at the Larsen and Toubro Infotech, then we have the LTTS, Mindtree, Persistent Systems, and KPIT. So as you can see, the KPIT Tech is clear outperformer. The whole IT sector index, just we are taking a look at the 6 month returns right now. So the whole IT sector index is down around 19% versus the KPIT Tech is up 0.72%. So there is clear outperformance as you can see, and it is followed by the TCS, Infosys, Mindtree, and then we have the Persistent, and the at the lowest level we have the Wipro and Larsen and Toubro Infotech. So clearly, and Scient also has performed well as compared to the other stocks right now. So yeah, it has fallen around 6.56%. So if I'm looking at IT sector, my top picks right now, my top picks would be the KPIT Tech, Scient, and TCS. So as you can clearly see, they have fallen much lesser as compared to the overall index, right? So the clear logic here is to look at the stocks that are currently outperforming the sector. And similarly, if we take a look at the banking stocks, here as you can see, uh, from last six month, if we take from last 6 month, so the City Union Bank has given around 50% returns, and it has outperformed the other large banks and even mid size banks. Like, and in the large caps, the ICICI Bank has given the most returns, around 36%. Kotak and HDFC have not given much returns, around 12 and 13%, and CSB Bank is even lower. Let's add few more names. Uh, let's take a look at the AU Small Finance Bank. So it also has not performed that well. Let's take the our benchmark index of the Nifty Bank to compare the stocks that are outperforming the sector as well. So the overall Nifty Bank index has given around 21.99%, and currently I have taken only private sector banks, and the CUB, ICICI, Indices, and one PSU bank, the SBI and IDFC First Bank, they have outperformed the index, that is our Nifty Bank, your sectoral index. So currently I would like to stick with the City Union Bank and few of the PSU names like the Indian Bank, and then we have the Bank of Baroda, as you can clearly see, Bank of Baroda and Indian Bank both have outperformed the other private sector banks like ICICI, IndusInd, and even SBI. See, you can clearly see the Bank of Baroda. If you look at the 6-month returns, Bank of Baroda has given around 41.85% returns. And if we add some few more names like the PNB, Punjab National Bank, so it has been a laggard, around 11% returns, which is below the sectoral uh, index return. So why I'm comparing it with the sector, because if the sector is performing well, you can just, if you don't want to pick a certain stock, you can just pick the ETF. And why would I go with something like CSB or HDFC Bank when when the ETF, if I take the Bank Nifty ETF, it has given more returns than that. So that is the logic behind it. So currently the CUB, City Union Bank, the Bank of Baroda, Indian Bank, ICICI Bank are currently outperforming the banking index. So as overall as the sector, the banking sector is coming up well, and it has given around positive 25-26% returns last 6 month return around 21.99% returns. So I'll be looking few names here, and I'll also be looking at the pharma and the healthcare index, because they, although they have not given any returns, so that is just a contrarian view like the IT. And so my topic would be the Nifty Auto, FMCG, and banking. And on the contrarian side, I would like to go with the Nifty IT index and the pharma sector as well. And the realty is also setting up very nicely, so you should check some stocks belonging to the realty sector. So one small announcement. So if you are looking to learn how to make money in the stock market using the simple price action, and this is only for the guys who prefer the swing trading or the positional trading, not the options and the futures and the options. So I have a small course where I have explained the risk management, the basic technical analysis, chart, how to use candlestick patterns, trend analysis, Dow theory, stage analysis, chart pattern, and how to trade them, market breadth, relative strength, how to select stocks and find the next leader, some trading strategies, and the position sizing, stop loss placement as well. So there are total 12 parts divided into 14 videos. So it is more than the 14 hours of content, and the price is around 2000 rupees, and the language is English. So if you are interested, I'll give the details below in the description. You can check from there, and you can buy the course simply by making payment and giving your email. So that was it for today's video, and just go through all these sectors and the stocks belonging to these sectors, and see if you find any undervalued, or maybe the best performers. I'll always go with the best performers, the stocks that are currently at the new highs, because they are the first one to give moves, as there is no overhead supply. So find the leading stocks in the leading sector, and maybe a few, one or two, the contrarian picks as well. Like the IT sector is currently placed well, and in IT sector we have the KPIT, Signed, and TCS as the current outperformers. So that was it for today's video. I hope you enjoyed it and you learned something. And don't forget to like, subscribe, and share it with your friends. Goodbye. Take